I'm going to put my flipper hat on here in a back flipper hat on, and we are going to get into it here.
Unfortunately, Flipper Mike, I think the answer is yes. Title insurance can be complicated, but that doesn't mean it isn't valuable.
Well, and I got a question for you on that, Bob, is why is it so expensive? I get it. It's important. I need to understand it. But look, interest rates are sky high today. And why should I give up another point to get title insurance? Why does it cost so much?
I'll tell you, Flipper Mike, I won't argue if someone says that title insurance is a ripoff, because title insurance is an extremely rich product for the insurance industry. I haven't investigated this in a few years, but the last time I did, the amount of claims per dollar of premium on homeowners insurance, so that's liability insurance, but typically offered by the same insurers who are doing title insurance, or it can be, but the amount of claims on liability or homeowner hazard insurance was over 90 cents for every dollar of premium. So there's less than a 10% margin between the amount of claims and the amount of premium collected. Title insurance was almost the exact opposite. There was less than $2 in claims. 2 cents in claims for every dollar in premium. So there was a 98% plus margin. Obviously, internal costs and things like that. Insurers will tell you that drives that profit number way down. But the reality it is a very rich product for title insurers. However, the rates that they charge are promulgated rates. So those rates, and that means promulgated means those are rates set by state law. So while it might be a ripoff, it's a legislated ripoff. I don't know. Some might argue there are a lot of legislative ripoffs in life in the United States, but this is certainly potentially one of them. Those are promulgated rates, but again, we're getting back to one of our key concepts here, which is that there are two policies: a owner's policy and a lender's policy. And in the insurance industry and in the laws around insurance about promulgated rates, those are the primary and secondary policies. And so the promulgated rate only applies to the primary policy, which is typically the largest policy, the owner's policy. But then that second policy is not subject to a promulgated rate or has a much lower promulgated rate. Again, this is subject to variation by state. But nonetheless, getting that second policy is not that expensive, typically. And so you need to negotiate that number when you're talking with your closing agent. And you may, so for example, if you're going to do numerous transactions a year like you do, Flipper Mike, they're probably in the same, relatively close geographic areas. So you may want to start working with one closing agent with whom you have negotiated a price for that second policy and for endorsements, if those are negotiable under state law and not subject to a promulgated rate, and they often are not. And so you have ways to start saving some money by negotiating some of these issues. And keep in mind what I said earlier about you now know how much money the closing agent is making. They may be charging you a closing fee, and some junk fees may be being charged to a borrower, to a buyer, or to an owner for that matter. But those are usually going to be significantly less than the premium share that the closing agent is getting. And so you can look at the settlement statement on your loan and make a pretty good guess about how much a closing agent is making on the transaction, and that should empower you to negotiate some of that down. And it is negotiable, and it is possible to get, in our industry with business purpose loans, it is possible to legally receive a kickback. And so, this is unlike consumer transactions where RESPA prohibits premium sharing, kickbacks from insurers or closing agents are all strictly prohibited in consumer transactions. But in our transactions, you can negotiate and try to get some sort of compensation from repeated referrals of business to a closing agent. So that's something that you, Flipper Mike, with your relatively high volume operation should consider doing.
Well, Bob, appreciate the candor. Appreciate you educating me about what's going on behind the curtain of title insurance. I think this has been real value add, very educational. So I'm going to give you the last word. Summing it all up, if I go out and I get title insurance, what benefit do I get?
Well, it's insurance, and insurance is designed to reduce your risk. There's no way when you buy a property that you can know everything about that property, its physical condition or its legal condition. And so title insurance will insure you against some of those things that you don't know. And so given the fact that the required lender's policy is only one of two policies, you're really only looking at the delta there to figure out what the true cost is for you to get insured, because you're going to have to pay something. If you don't get your own policy, the primary policy is going to be the lender's policy. And so you're going to pay the promulgated rate on the full loan amount. So what's the difference between, so you have to then look at, okay, if my primary policy is my policy and I've put an extra, $100,000 into the property or $50,000 in the property. What's the cost of insuring that $50,000 under the promulgated rate plus the cost of the secondary policy? That's your real expense here for getting fully insured. It's not the full promulgated rate that is really at issue here and what you should be thinking about. So, and then as we've said numerous times, insurance is a contract, and it is negotiable. And I've talked a little bit about the closing agent, what their role is in the transaction, how they get paid, to give our members a little bit of idea about that and what leverage they might have in terms of negotiating. So I think those are the important things to take away.